Retail has gotten better. We've got good trends. The quarter was pretty good for most retailers. You've got momentum. Tax reform is a positive. And there's a fear that if you have these tariffs, which are simply another form of taxation, that if you get into a trade war with retaliatory action and it goes into things like apparel, it could dampen the effect. It could hurt the momentum that we have right now. And people are very worried about it.
John, I imagine it's a busy week for lobbyists on Capitol Hill, with Republicans saying they don't like the idea of a blanket approach here. What are automakers doing kind of behind the scenes to try to get some influence into what eventually ends up happening here?
Yeah, you know, these tariffs, if they go into effect, they're going to raise prices on American consumers. They're going to invite retaliation from our trading partners. And, you know, I agree with Steve, they're going to set back the benefits of corporate tax reform that are now creating more investment into plants and equipment in the American auto industry. So we don't want to do that. And I very much appreciate the leadership of Speaker Ryan, the Senate Finance Chairman Hatch, and others who have really said, look, let's take another look at this. Let's get back to the drawing board and focus on what the real problem is here.
And Steve, sort of digging into tax reform a little bit more, retailers, some of the biggest beneficiaries of this tax reform bill. If you were to see something like tariffs go in place and across the board and trade retaliation in return, does that wipe out those positive effects of tax reform?
Well, it may very well. I mean, we have to see. Right now, our estimate is that you probably have 5 times as many job losses as you have job gains as a result of the tariffs. Right now, we're seeing positive momentum. Tax reform is allowing retailers to reinvest. You saw the fourth quarter being pretty good. January was good numbers. You saw even Target today, who disappointed a little on the earnings, said that January came in strongly. So consumers are in the stores. The last thing we need to do is stop the momentum that we have.
Retail's not a big steel using industry. You're talking about knock-on effects from consumers having less discretionary income?
Well, you do have some effect of steel. For example, you're investing a lot in the internet. Internet takes a lot of warehousing. You have a lot of growth in that. So you have steel for all the racking systems that you're building for all these distribution centers. So there is an impact on the retailers. I'm worried about that, but I'm more worried about getting into a trade war and you start affecting all of the products. We have a lot of imported products in retail that can't be made in the United States. We don't have the capabilities, we don't have the technologies, the labor costs. There's a lot of reasons why we're importing products.
And John, we're talking about tariffs right now, but the other big focus has been NAFTA and the future of these talks around renegotiations of NAFTA. If that were to go away, and there was all this uncertainty around trade in North America, given how integrated that supply chain is for the auto manufacturers, what happens then? I would imagine some of these suppliers and components makers are already coming up with next plans, right?
Yeah, you know, it's a double whammy, right? You have the uncertainty around whether we can land a NAFTA deal that continues to support a competitive U.S. auto industry, as well as these tariffs hanging out there. So I think it's really important that we get a balanced approach. You know, we're competing with major manufacturing centers in Asia and in Europe, and we want to win that competition. And the key to winning that competition is having a balanced approach on NAFTA that supports global supply chains, which increase American jobs. We're making 1 million more cars and trucks in the United States today than we did before NAFTA every year. That's a great story for the American auto worker and for American consumers. We want to keep that going, and we can't afford to get either of these two things wrong.
Hey, Steve, some are, they have a theory that this is all a gambit connected to NAFTA negotiations, right? But it's something they can use as a chip later on. If that's true, is that something you respect? Or is this playing too much with fire?
Look, this is playing with fire. It's high-stakes roulette. I worry about the consumer. In the end, the consumer is 2/3 of our economy. We have a healthy consumer today. Anything that we're going to be doing that's going to hurt that consumer momentum is bad for retail. I think it's bad for the consumer, bad for jobs, and it's a tax that we don't need. So I'm worried about it. And you know, I feel very good about what was done on tax reform relative to helping corporate growth, helping the consumer. And if we go backwards, we're moving in the wrong direction.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.